An interesting RNS out this morning from Metals One in regard to the P5 project. Here to tell us more about it, Jonathan Owen. Jonathan, what's the latest news? What does it all mean?
No, this is great news. It's been long expected. So this is the receipt of all the assays now for the P5 target and the appointment of Mining Plus to undertake the mineral resource estimate. So to remind you and the listeners, the P5 target is a JORC exploration target of 16 to 24 million tons. It was never completely assayed. The range of tons that I gave you there were basically correlated to handheld XRF data, which is not particularly accurate. So we've taken all the remaining intersections. There's over 5,500 meters drilled there at P5. We've taken the remaining intersections and had those chemically assayed, which is far more accurate. And that, we hope, will allow us to elevate the confidence levels and potentially the volumes of P5. So effectively convert it from a target to a mineral resource.
And what sort of timeline are you looking to get these results back in?
Well, the results are now received. So that's the confirmation this morning. And on the back of that, then we've now appointed Mining Plus, having reviewed a number of leading global mining service providers. Mining Plus will move forward now and generate the mineral resource estimate with that new data set. And we expect to receive that report and share that with the market in July.
July, okay. So that'll be a big news event in July. And where will you go from there?
Yeah, referring back to our sort of updated strategy for the Black Schist projects, which we released in February, the plan is to get the Black Schist projects into a development and ultimate production situation by 2030. This is in line with the EU's benchmark for the domestic supply of strategic metals like ours, so copper, nickel, cobalt, etc. So winding that back, or looking back now in terms of the timeline, we've got to move pretty quickly to achieve that. So with the mineral resource estimate in hand in July, we'll take a view on that then in terms of whether we feel we've got the critical mass in terms of volumes to move immediately into preliminary economic assessment, which would be a pivotal point for the company. It'll move us from discovery play into truly a development play. There might be a situation where there are some gaps in the data set which requires to do some additional infill drilling, and we can maybe do that in as soon as August. And update the resource estimate again and move through to the preliminary economic assessment. The idea is to get the preliminary economic assessment kicked off this year and ideally completed in Q4.
So today's news is actually the beginning of a series of very meaningful and impactful developments that you hope to push through.
Yeah, exactly. In terms of that inflection point between discovery and development company. Really what we're looking to achieve, what defines that pivot, if you like, is having the ability to move your asset from an exploration target and onto your balance sheet, which means you need to identify what the economic parameters are for that project and what's the potential NPV, capex, IR, etc. And that's the output of the preliminary economic assessment. So once we have that in hand, it opens up a number of doors in terms of potential EU-backed project financing, project fast tracking thanks to the EU's Critical Raw Materials Act, which supports strategic projects like ours, and of course it allows us to capitalize the asset as well, which would give us sizable attribution in terms of enterprise value.
And in terms of the results that you've got in and what you can say publicly at this point, why is this project attractive to investors? What would be the main highlights that you would draw their attention to?
Well, they're multifold. Let's pick out the top 3 or 4. The first is we're developing much metals that are in desperate need in the EU. The EU have passed legislation, the Critical Raw Materials Act, the battery regulations, etc., which are pushing forward domestic sources of low carbon, low cost strategic metals within Europe for the European market. And that is exactly what we're developing here. And there aren't many opportunities like that in Europe to supply those. Secondly, looking at our exemplar next door, the Talvara mine, which mines the same type of ore as us, they've already demonstrated that they are one of the lowest cost producers globally. They've produced EBIT of 25 to 30% during the the bottom of the commodity cycle, and they've demonstrated that it is the lowest carbon intensive source of battery metals globally as well. So we have that as well. Plus, then we have the fast tracking. So ultimately, the end goal is to get into production to generate free cash flow. That means moving through the gears now through these studies, the preliminary economic study, the pre-feasibility, and then the bankable feasibility, and getting that financial investment decision in 2027, 2028 for production by 2030. So it's, we're moving quickly. You don't see many exploration, discovery, development companies moving this quickly. So we hope to see the enterprise value increase significantly as we go through the gears as well.
So we're talking critical metals, low cost, fast development timeline.
Correct. Correct.
And so some new money recently came into the company as well, and I believe the directors participated in a meaningful way in that fundraising. Tell us a little bit about the background for that, what happened, and what it means for Metals One.
Well, really, if you rewind back to our Black Schist strategy update in February, you'll see that we at that time we'd already set out these ambitious goals to significantly expand the resource base in the Black Schist, and this P5 assay work and resource estimate is a major part of that. We have seen from the start, hence why we acquired this asset in the first place, the potential there to do that, to increase the volumes, and also potential for low cost mining and fast development. And as we've seen over the last couple of months, we've seen a lot of activity in Europe. We've seen the Critical Raw Materials Act adopted recently, and that sets out then and confirmed these opportunities for the fast tracking of projects. That's fast tracking the permitting process, and also the potential for EU-backed project financing through, for example, the battery fund, the 500 million euro fund that's just been set up to support our projects as we move through. The situation is basically we as a company want to retain as much control and ownership of that asset as we can, and we believe that's the best thing for the shareholders. And the opportunity there was with Gunsynd was to replace that farm in and bring that control back. The secondary situation there is with regards to the Gunsynd farm in, is this was a staged payment process of 250,000 every 3 months. It's quite a challenge to commit to drill contractors, etc., to manage your work program with a stilted cash flow like that. So it's great to have that money all in hand now in the bank, and then we can move much more quickly towards our goals for 2024.
So this funding will see you through for a significant time period in the future, I suppose. What are we talking?
It'll take us through the preliminary economic assessment, which is a significant piece of work. That'll take 4 to 6 months, and so that'll take us through to the end of year and beyond. We'll look to. I talked about drilling earlier in terms of infill drilling and P5 to improve or fill in the gaps in the data set. We've also budgeted for rounds of drilling later in the year and into early 2025 as well to generally uplift the volumes, and we'll be guided where that drilling will be on the back of this resource estimate. It may be to expand P5, it may be to expand R1 or the R1 hook that we drilled in December. Plus we have a pipeline of other targets as well to develop. So
plenty to look forward to. Jonathan Owen, thanks for joining us this morning.
Thank you.